The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are faring well in these tumultuous times that we're living through these days. Just another day of red on the screens, but we'll get to that in a moment. Of course, my name is Mark Longo from the OptionsInsider.com, as well as many of the shows here on the old Options Insider Radio Network. And one quick caveat today, I am a bit hopped up on pain pills as a result of a cooking mishap that involved a lot of flame and a race to the old emergency room late last week. So if I say anything crazy, just file it under the old pain pills, and we'll just move on. Thankfully, I am not alone on today's show, or it would be a very strange one indeed. I am joined in the KYO hot seat by good old auntie/grandpa Mike Cavanaugh from Know Your Options Inc. Auntie Grandpa Mike, how are you doing today?
Excellent. Thanks for having me once again.
Glad we can have you on. And aside from my burns and whatnot, no medicine ball injuries on your part again, are there?
No, we've been injury-free here for over a month.
You have the little calendar on the wall, no accidents since
we cross
for 30
off
days.
The days. We cross them off.
And listeners, you also have a rare treat in that Mr. John Grigus is holding down the Options Express seat today. I think it's been, 2-3 years since you were on the show last?
Yeah, it's been mid-August. I know that, before I left for my trip to Florida. So, no, it is good to be back, and I apologize for the delay. I was gone over Legal Day 1, as we refer to it here, when Schwab legally acquired Options Express. And to say that they've, a little more work in my day, it would be an understatement. So doing a lot of weekends and a lot of late nights working from home. I think I've got 2 kids. I haven't seen them in a while either. So I miss my kids at home, and I miss my extended family on the Options Block on the Options Insider Network. But glad to be back today. I'm sorry that Sebastian couldn't make it, but Cavanaugh's 2 times what Sebastian is, so at least we have him.
At least in mass, if not else at that point. But yes,
by mass for sure. In mass.
Of course, Mr. Seabass can't be with us today. He has a previous engagement or something along those lines. I think he's got a mini metals gig he has to go manage today, so he has to run off on that front. A lot of changes happening over at Option Pit, I know as well. So he's probably in the midst of those. But with the team mostly assembled, we will dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we break down what's been trading, what's been moving the markets, what's been hitting up the street today, and it was Another day of red on the street, as we alluded to in the intro there. A lot of concerns over Greece once again coming to the forefront, even though last week it seemed like it was all rosy and the market was up on that news. Now we're back down. The Greek yo-yo has struck yet again. We closed today. S&P, as we're talking, broke that crucial 1100 level, closed at 1099.23, down about 32 handles, or nearly 3%. The NASDAQ down to about nearly 80 handles to 2335, and the Dow down about 260 almost to 10655. And then the good old VIX cash creaking up about 2.5 points to 45.42. As we alluded to earlier in the day on volatility views, you expect a day like today, the VIX to be skyrocketing even more, but that just goes to show you right now just how much of a move they're pricing into the VIX already, and just how high the VIX is. We're even on a day like today with a 30 handle down move in the S&P. That's about right, actually, for the current level of VIX, what we're pricing into the VIX, with a 45 or so level here at the VIX. You need a 25 plus handle move in the S&P on any given day in order to really justify that level of volatility. So earlier today, when the S&P wasn't down as much, we actually saw VIX barely to the upside. So that might surprise some people, but when you look at the VIX in the pure context of what it is and what that number actually means, it's not exactly entirely surprising that VIX would only be up a wee bit on the end of it. And a lot of that looks like it came in the last few minutes of the session as we gapped down again. I'm sure a lot of arresting orders to sell were triggered once we gapped below that 1100 level. Auntie Mike, what were you fixated on today, aside from, I imagine, gold and the metals, or is that the St. Charles office that handles all the gold and the metals?
Mike is out in St. Charles. He's been watching a lot. I mean, really, today we were sitting on our hands. I mean, we didn't make any moves today. We had thought about selling a put spread on the S&P, and I'm glad we held off on that. We didn't make any adjustments. I mean, we had a fairly large adjustment in gold. I think the future spot, we're down like 350 points over the past few days, and then we saw a little bit of a rebound here in the last trading session. But we have not done any adjustments today, hanging tight, still hedged on everything. But this is one of these days where you look at the market and what it's done. I mean, the S&P was down 32. The Dow broke the critical 10.7 level, and we're hedged on everything. So we take a day like today to say and thank our lucky stars that we are hedged, but we didn't make any maneuvers today.
So no adjustments in the vast KYO holdings of Ford, which has tipped down to the downside a bit. Ford closed at $9.37 today, down about 30 cents. I know you guys have a broad spectrum of holdings in Ford at this point.
Yeah, nothing done on Ford. I guess we did make one adjustment. We came in Apple, the form of the Apple hedge we have on. Looks like we bought a call spread to add to our bullishness, it appears. But
strong bulls still at KYO.
Literally, it was a great day to hang out underneath the desk, George Costanza style. And, when the show started at 3, I came out from underneath the desk to see how bad the damage was.
Yeah, good old Apple crushed a wee bit as well today. It's traded down nearly 7 handles, or about 2%, closed it in about 375 or so, down about 25 handles from where it was trading on the 400 level not too long ago. So perhaps the combined negativity of the markets and the rumors of this impending Amazon device, I should say, maybe eating into that a wee bit. Of course, it seems like we're playing out there in the market these days. It seems like it's almost like a game of, you have whack-a-mole at the old arcades, like Whack-a-Bankruptcy. Just when you have one name pop up with bankruptcy rumors and it gets crushed, then that fire maybe gets squelched a little bit, and then another name explodes. Of course, we're talking about today, the big name on the old the bankruptcy, Whack-a-Bankruptcy game for today was, of course, the airlines, in particular AMR, good old American Airlines Corp, and we'll get into more of that in a bit in the old odd block. But nonetheless, it was just a crushing. They were halted 4 or 5 times, I believe, today during the course of trading. So not exactly boom times to be in the airlines. Mr. Grigus, I imagine your trading desk was pretty active today with calls for AMR and its affiliates.
Yeah, I mean, not just the airlines, but in general. I mean, today was a day trader's dream. I mean, we were Futures were down 75 points when I walked in. And sometimes, if I don't have a quote right in front of me, I go off what my last memory was. And about 3 times I was wrong because Dow was down 70 to start the day, then it was up 12, then it was down 85, then it was flat again. And really the move didn't happen until the end of the day. And I've been watching the SPX over the last 3 weeks, and if you take a look at it, I mean, we've been, every time we get down to this range, we end up rebounding and testing the top of the range. I think today was a little bit different because we closed significantly below that SPX support, right around the 1100 area. But if you looked at it the last 3 times, if we gotten down to these levels in this area, if you had bought it, you did great. So our desk was busy, but I don't really think it was entirely the airlines. I mean, everything was moving today. Apple. The only thing that wasn't moving was Netflix. That dog stock. I know you guys probably talked about it for the last month, but that thing finally took a breather.
Were you at least short that one on the way down? I know you've been. Of course,
no,
you got short some premium, didn't you?
I bought the 165 calls like the third day down for $2. For $2, I sold them for 60 cents. Pretty much wiped out that account.
At least you got out then.
Then I sold. Then 2 days later, I sold a bull put spread for $3.90, and I covered it for 50 cents on expiration. So that was so I lost. I was able to recoup about 30% of my loss.
You worked it back there.
I can't believe I've never seen a stock fall 62% in like 5 days.
Yeah,
man.
They don't call it the Widowmaker for nothing. That thing is just a beast. If you had any sort of units to the downside and you took a vacation and weren't watching and came back like a week later, you had 100+ handles in your favor. It's just amazing
where did my account go? What happened? Netflix trading for $100. I mean, it was a pretty drastic move, but I mean, I think them splitting into those two was another catalyst for another sell-off that I wasn't prepared for. So that kind of hurt me a little bit, but sold the put spread and made a little bit of it back. Still sitting in my Bank of America stock, watching that thing get absolutely pummeled.
Good old BAC, broke through a relatively strong support level at the 6 handle. In fact, we had been trading. I had just closed out some short 6 puts, I believe, going to expiration last week because you shorted them a while ago, and there was such strong resistance at the 6 level, support at the 6 level, that it just bounced right off that 6 level, and it was hovering well up, got almost up to 7, I believe, at one point there out in BAC. And with a name like that, it's becoming kind of the new Citigroup, so you don't expect major vacillations in that name. The high freak guys like to keep things usually pinned around a strike a little bit, so usually in those types of names you don't see them break through too dramatically. But good old BAC down 60 cents today, or about 10% to 550 roughly. So I guess that 6 support no longer there. The high freak guys want it down, and they're taking it.
Yeah, what about the Buffett effect? I mean, when he came out and announced pre-market that he was, dumping $1 billion in Bank of America, I think in the pre-market it traded up to 870, 890, and then I was like, okay, that's not bad because I'm long from like the mid 9s to high 9s, and I'm like, oh, this is fine. One day we made up 20-30% of our losses, and then boom, right back down. I thought there'd be some bottom feeders, but they look like this thing's gonna Citigroup reverse split.
I hope they don't go the Citigroup reverse split route. That would just be following bad money with even worse money. But good old the Buffett effect. As much as he badmouths derivatives, he loves to take advantage of them whenever now and then to get some good deals. And he got a good deal, at least it looked at the time like a decent deal in Bank of America. Not looking so great right now. But he still, that gave a stock a nice bump. I think you're right. It got as high as close to, I think, $9 there. Just pulling up the old chart now. Yeah, I got up to about 880 in the high there. So if you bought up there, then c'est la vie. I know you guys, Uncle Mike, or Auntie Mike, I should say, you guys are active in the financials. But you like the more broad stuff like XLF, right?
Yeah, we've been playing more in XLF. Most of the times when we get a client calling in about, wanting to own a financial, we refer to the little blue book of investments. That the first rule is don't buy financial stocks. And if there's a testament to that adage, the last 5 years should be a good reminder. But if we do want the financial exposure, we'll go into the XLF. And surprise, surprise, we'll collar it.
You collaring it? Say it ain't so.
It seems to be our MO, which works.
And of course, we can't close out the old trading block. You talked earlier about day trading opportunities. We can't close out the trading block without mentioning the symphony of madness that is Kodak these days. I'm not sure if you guys have been watching this roller coaster beast, but it's been a fun ride to participate on, and especially on Friday when we saw just the bottom fall out of this name. If you haven't been watching the once mighty Kodak and what hard times it has fallen on, it was trading very recently, up a few weeks ago, around 325, 330, and there was a lot of actually people looking to cover to the upside because there was all that rumors about people getting, of course, MMI got gobbled up for its patents. People thought Kodak might be next on that train, so there were active bids in the 4 and 4.5 calls going out there as people were looking to cover and spec on some potential upside pops in Kodak, and then it's been drifting down ever since. Broke the 3 handle a couple weeks ago, I believe, or a week and a half ago. Then it started trading into the 2s, got down to about 1.5 on some really pessimistic stuff, but late last week, and then just the bottom fell out when rumors of a bankruptcy emerged, and the stock gapped down to about 50 cents, got halted. And of course, if you went into the options at that point, it was amazing. There was no bid at $1 for everything you could look at. No one wanted to put any bid in anything out there. So I actually floated some crazy, I think, dime or below bids for some April 1 calls. I ended up getting filled in the madness that follows afterwards. So I picked up some April 1s for just a joke. And of course, now the stock gapped up today. It was trading around 150 for a while. They're up nearly from the lows up $1 or so. So yeah, some rebound today. I was able to leg into some nice verticals for ridiculous, should be illegal credits. So because that just goes to show when these fast markets hit and people's wits, you lose them or leave them. If you keep your wits about you, you can make some decent profits in those types of environments. And so Kodak now closed today at $1.34, up about 56 cents or 72%. But
so what did you pay for those? I'm curious. Those $1 April calls.
I got them for a dime and under. Actually, got some for 9 cents and under. Yeah, they were ridiculous. They got
it's highway robbery.
Oh yeah, it's absurd. I got up to because there were no bids out there. So I thought I'll float some bids here. I like these levels. I know this name fairly well. They got up to I think around. Let me see today. I think they got up to about 75 cents today. These calls. So it was just stupid what people were doing out there on Friday. And I could just
see the guy on the other side of that trade going, oh, this company's going bankrupt. Bankrupt. Let's see who's got bids out there.
Exactly. Hit any bid you want.
Free money.
It's like you're just dangling the hook in front of these guys sometime, waiting to see who to hit you. But yeah, it's a fun name for a day trader, especially. This is just vol all across the board. I'm imagining that it's a little too volatile for the KYO cover and walk away strategy.
I was going to tell you exactly what I was thinking when we sold the Kodak $1 calls. No, I'm just kidding.
That was you scrambling. Find a bid.
Yeah, no, this does not, on a day-to-day basis, this does not make it across our radar. Eastman Kodak was a great company, I think, about 30 years ago. I couldn't even told you that it was a company still. We don't follow anything under $20, let alone a stock that's declaring, rumors about bankruptcy. So,
not exactly good for grandma's long-term holdings there.
Yeah. I mean, seriously, we're never going to look at something like this.
Yeah, which is why it's fun to talk about it on the old option block to give you a chance to peruse into the dark waters of the day trading.
Yeah, I gotta imagine it's kind of hard to collar a $2 stock, right?
Yeah, exactly.
When the stock is cheaper than the option, sometimes, yeah. I mean, you use the synthetic to just purchase calls, or vice versa. It doesn't wet our palate, so to speak.
Let's just see what we saw before we close out the old trading block today. What we had today in EK. Yeah, it usually does lately it's been doing about 40,000 contracts a day, which is a ton for this name. Usually it does a lot less than that. I think that's factoring in some big spikes, but today it did 110,000. So yeah, Kodak just lighting up the tape today. Just a crazy name to watch as the old monopoly of black and white and slide print film slowly slides into oblivion. A good one, a fun one to watch. I figured Grigus would like it because, of course, he likes those heading south names and the fun day trading ones. But that's going to do it for the old trading block, and now we're going to roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we talk about the absurd and indeed the ridiculous options activity that we saw lighting up the tape today. And speaking of absurd and ridiculous, remember that disclaimer I put at the top of the show there that I am hopped up on pain pills. So if I say anything absurd and ridiculous, just blame John Grigus. It is not my fault today. But all right. And kicking things off, we mentioned the airlines getting pelted in the trading block. And not surprisingly, one of the names we have on the odd block today is good old AMR, the parent company of American Airlines. They do about 17,000 contracts a day. They did about 130,000 today. Not surprisingly, it looked like it was actually about a 1-to-1 call to put on AMR, which is surprising given what we saw early in the day when it was so heavily skewed towards the puts. And of course, in terms of options activity, we saw a lot of put buying out here in AMR. If you weren't watching it, if you weren't watching AMR today, the airlines took a beating, AMR leading the way. It closed the day down about 33% to $1.98, down 98 cents, but it was down well over 40%. Even actually, I think it was down even more than that at a certain point today. Let me look at the let me pull up the stats. Yeah, I got down to about $1.75 today. So it was trading south fairly heavily as rumors of bankruptcy. We mentioned the Whack-a-Bankruptcy game going on. First it hits Kodak, now it's hitting AMR, and people appear to be buying this one as opposed to maybe not buying so much the one out there in Kodak. At least today, we saw a lot of put buyers diving in to AMR. We saw a lot of activity on the Nove 2 puts. These guys lit up the tape today with about 16,000 total contracts, previous open interest of just under 600. So ton of opening prints here on this strike. The bulk of these puts were purchased for about 21 cents. So a lot of opening put buyers here on AMR. And you know they're desperate when they're coming in buying 21-cent puts on the 2 strike. You know that people are really thinking that the end is near for AMR. We also saw crowds flocking into the OC2 puts. Nearly 14,000 of these went up today as well, hovering around 14 cents or so for the bulk of these puts. And these are already winners. I'm looking here at where these puts went out at the end of the day today, and these things went out nearly 50 cents. So not surprisingly, a lot of vol pump going on in those strikes as well as all this buying activity is flocking in. We saw implied vol on AMR shooting up about nearly 140% today to close the day around 194% or so. So AMR just lighting up the tape with a lot of pessimistic paper. The call to put is a little better than we expected. It was looking heavily towards the puts in the beginning of the day, evened out a little bit towards the end of the day, closed around 1-to-1, but the explosion of put buying really just telling the whole story right here for AMR. Of course, these puts have to drop well into the $1.80 or so or south range for a lot of these puts to break even, and just a lot of overwhelming bearish sentiment in the airlines today. I know, Mr. Grigus, you said a lot of people were playing in AMR today. Do you have a lot of put buyers lighting up the phones today?
Yeah, we had a lot of calls about the industry as a whole. A lot more people playing Delta, DAL, and Southwest Airlines, LUV. Southwest Airlines, a fairly good run company, but I think when you get something like this in one airline, it's going to spread obviously to the next. But why wouldn't we see the same thing we saw in Eastman Kodak as we see in AMR? I mean, why not have a big bounce like Eastman Kodak did? I think Eastman Kodak's in more trouble than AMR or any of the other airlines maybe. But I mean, yeah, 16,000 puts on a $2 strike. Maybe it's time for the airlines to get bailed out. And a few of these, maybe Southwest Airlines is the Ford out of the airline industry, and we'll see Delta and American Airlines go bankrupt. Or, bankruptcy now these days, it seemed to be a benefit for the company. The shareholders lose out. We had the banks in 2008 and the car industry a year later, and now maybe it's the airlines' turn to get bailed out and lose their debt, restructure with the unions. It seemed to work for GM. Why not for the airline industry?
Yeah, if I had to pick a horse in this race, I would definitely put my money on Love. They seem to have the most differentiating factors at this point. They have their cost structures in place. They have things like free bags, which people know when they go there that they can get that value added for their trip. They're relatively aggressive on price. They've done a lot of activity to hedge their fuel costs, which other airlines surprisingly did not do. I don't know how you run an airline and not hedge your primary expense. how you're not active on a day-to-day level in the futures pits for oil. I don't understand if you run an airline, but c'est la vie. Perhaps that's the degenerate derivatives trader in me speaking. But yeah, if I had to pick a name of this bunch to bet on, it definitely would be Love. I wasn't watching, I didn't have a chance. I was running around a lot today. I didn't have a chance to be as active in AMR as I was in Kodak on Friday. I would have loved to try that same trick and float some nice little juicy hooks out there, especially in the fourth or fifth time that AMR got halted today. I'd imagine you probably got some fairly juicy levels if you were willing to stand in amongst the stampede and be the lone man working a bid. Unless you're buying puts, then you could buy puts all day, I suppose. But yeah, you got to, I don't know, would you be lining up to buy 20-cent puts here on the $2 strike in AMR?
I wouldn't touch it. I mean, unless I'm holding a bunch of AMR debt and, I'm very concerned about AMR going under and the stock goes to zero and the equity options are just a way to hedge the debt. The risk to reward isn't there. I mean, if you think it's going to zero, why not buy the $1 puts for 3 cents or whatever they're trading for versus, paying, I think the October $2 puts right now are trading around 50 cents. Why pay 50 cents when you can pay a dime? The risk reward seems better on the $1 puts if you think it's going out like that. So I try to stay away from, if you look at risk reward scenario, it's a 3-to-1 payoff if AMR goes bankrupt. The question is it going to go bankrupt in the time period you select? I just don't like making bets on companies failing.
It's against your nature.
It's against my nature. Not against my nature. Like if the company's going to fail, sure, I'll do it. But from a financial perspective, the risk to reward payoff on the $1 put seems a lot higher than the 2 put.
Yeah, especially now that these 2 puts have been jacked to holy heaven here. 50 cents for a $2 put.
They're higher than you on pain pills right now.
Exactly. And I'm fairly loopy, listeners. But yes, so yeah, even as loopy as I am, I would not be lining up to buy these now 50-cent OCT2 puts. That's a serious flyer right there. Unless of course you do, like you said, have a lot of debt and you're looking at the CDSs out there in AMR. I'd imagine they're trading well north of 50% up front for those CDSs. So I guess maybe by comparison, that 50-cent put looks cheap. But that's probably the only way I could even be thought of to do that. And I agree. I would gobble up the 1 puts for 9 cents or so before I did the 2s. All right.
And something else I might do on this, if I'm looking to risk a couple $100, nothing major, instead of buying the stock just outright, maybe buy the stock. If you bought 200 shares of the stock and you're looking to be long 400 at some point, buy 200 shares of the stock and sell the at-the-money straddle. I mean, the at-the-money straddle is paying close to 90 cents. You could buy 200 shares, sell 2 puts, sell 2 calls. I kind of like that as well.
Yeah, you got only about $1 a downside. You got some nice, if your upside is just a covered call. So it's that's not a bad little strategy either. If you guys had to pick right now a pairs trade of Kodak versus AMR, which one are you bullish? Which one are you shorting to high heaven?
I'd be long AMR, short Kodak, unless Kodak signs a deal to start taking pictures of the planes.
Yeah, I have to agree. I thought, like Mike said earlier, I didn't even know Eastman Kodak was still in business. I'm kind of on the same boat. I thought they kind of went away with the 35 millimeter film. I think the government's more willing to bail out an American Airlines or another an airline industry than they were going to help out Eastman Kodak. But I think we talked about Eastman Kodak about 2 months ago when it was in the $3 range. I mean, what's the value of those patents? I mean, isn't that a patent company now?
Exactly, that's what it is.
What
it's
they
a
have
patent
left?
portfolio now, and that's the question: is the value of the patents? I have to estimate the value of the patents is worth north of $1. I would think per share on a lot of these names. Of course, they've been trying to sell these patents for a while and haven't received many bids, so maybe they're not as strong as a lot of people were thinking, which is probably helping to accelerate that decline in the stock price. But still, at this point, yeah, anything else is moot. They're a patent company, and the value of those patents, I'd imagine if Google's willing to pay all that money for MMI, than maybe a few bucks here. Or Apple, my God, they have $80 billion in cash. They could scoop up some patents from Kodak and just go on the offensive, suing everyone else with these Kodak patents. So maybe there's something to be said for that. I kind of lean on the patent side of the equation, I suppose. So I'll be the lone bull for Kodak here. But just a fun pairs trade to discuss. And then moving on in the old odd block, next up we have McDermott International Inc., ticker symbol MDR. And this is a worldwide energy services company. And they set a new 52-week low this morning of about 1045, but they have since bounced off that level. They closed the day at 1123, up about 47 cents or 4.5%. So it looks like the downturn in the name was quickly reversed today, and looks like the people who were the unusual activity we saw this morning bet on the right side of that coin. We saw a lot of opening bullish call buying here in MDR this morning, particularly in the, well, before we even get into the specifics here, this is the name that does about, a couple thousand contracts a day. They did 47,000 today.
Yeah, the put-call ratio there looks like about 14,000 to 1. I mean, there's barely any puts that, there's a couple hundred here, a couple hundred there, but the 1,000 lots are coming through on the call side.
Yeah, well, our guy had written up here about 3,600 NOV 10 calls, but that's it's like small. But 10,000 up today. It was like 14,000 of the OC 14. So we saw a lot of activity this morning anyway in MDR in the NOV 10 calls, lighting up the tape today. We saw a block of about 3,600 going up right in the opening minutes of the session, and a total of nearly 10,000, about 9,500 today. We also saw a huge amount of OC 14s lighting up the tape today, nearly 13,000 of those being lifted. I don't have the direct prices for a lot of these right here in the write-up, but safe to say these were all opening buys at substantially lower levels than where they closed at the end of the day today. So we saw an applied vol, not surprisingly, even though we had a rally in the name, we saw a pop of about 4% in this name given all the buying activity. Again, this is the name that does about 3,000 contracts a day. They did 50,000 today with a 8-to-1 call to put ratio. So that should show you where a lot of the intentions were leaning here in good old McDermott. I know, Auntie Mike, I know you guys play a lot in Nat Gas and a lot of the other energy names. You watch McDermott at all?
No, we haven't been watching it. Now that you bring it to our attention, we might start taking a look at it. I mean, coming off the 52-week low like that, I'd like to see if some more volume comes into the stock. If it's able to hold this area, it might be a nice little keeper.
It's the name that was trading about $20 until its earnings announcement back on the 2nd, and then it just looks like it just got the legs cut out from under it. It went from around $20 down to 14 or so in just a day or two after that. So yeah, and then it's been vacillating around the 14 level, and today got down to 10.5 or so. So ever since August earnings, it's been a downward spiral for MDR. So maybe this is showing the beginning of the turnaround. Certainly a lot of size players putting their money where their mouth is, thinking that MDR has a decent future ahead of it, at least going into OC and NOV expiration. All right, and we're going to finish it up here in the old odd block with Las Vegas Sands. I know, Mr. Grigus, you're a big fan of LVS, I'm sure.
Big fan of Las Vegas, but LVS, the option itself, and we do get a lot of people trading this. This is one of those ones that falls into the category of your Baidus, your Apples, your Google. It is just one that puts up a lot of numbers each and every day. So we do see a lot of retail clients definitely trading in and out of LVS.
Yeah, they do some numbers here. They do about 83,000 a day. They did 90,000 today, but it wasn't so much a size play that caught our attention today in LVS as much as it was an intriguing trade structure. It's too bad Uncle Mike wasn't here because he loves to call stupids, and what we saw today was essentially a call stupid / spread going up here in LVS. It wasn't that big. It was about 3,000 total contracts. Nonetheless, an intriguing structure. We saw LVS selling off today down about 4.5% or 1.63 points to 36.71. And we saw one trader coming in looking for a near-term pop here in LVS, essentially setting up what you can call two separate call spreads, or a call stupid versus a short, a call stupid / spread, however you want to term it. But he came in picked up about 1,000 of the OC 35 calls for about 410. Then he picked up 500 of the OC 37 calls for about 295. Then he turned around and sold the OC 39s 1,500 times for about $2 each. So essentially, he spread his long premium out a little bit. He didn't want to dump it all on the old 35 strike, so he legged into that stupid that we like to talk about on this show, a ratio stupid, 2x1 stupid, and then he sold the upside all 1,500 of them at the for about $2 a pop. An intriguing way to set up a trade. You don't see too many of these. We've seen stupids. We obviously seen a ton of vertical spreads. We don't normally see them combined like this, or we don't normally see traders either being if you want to term it savvy, or if you want to term it indecisive enough to spread their premium out across multiple strikes like that in the long leg of the spread. But so this guy is obviously looking for a gap up north of 39 for these trades, or a gap up to 39 for these trades, really to start paying off. They can make a couple of bucks here if this thing gaps up well north of 39. So I thought it was an intriguing setup for this spread. I know you said you watch a lot of paper in LVS, John, and this doesn't really even register in terms of volume in LVS, but nonetheless, an intriguing setup. I thought it was worth highlighting here in the old odd block.
The call stupid, always the favorite of the Options Block podcast.
It is. You gotta love
it. I'm surprised you were able to pick that out of the weeds, because I had a hard time following you just on the air there 5 minutes ago. But
yeah, well, that's why we have such an army of good contributors. They pull these out of the weeds for me, and then I did shovel them to me to read. No, but yes,
but it looks like a bullish position, and he definitely has it on.
Very, very well put, sir. He does indeed have it on. And with the old odd block closing out, we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Xpress Block. This is the part of the show where the boys from OX take over the hot seat and allow me, the host who's hopped up on pain pills, to take a little break and sip a nice relaxing glass of water. So thank you for that, Mr. Grigus, and by all means regale us with what you have in store.
Thanks, Mark. What I have here today, a few things I wrote down, what's lighting up the phone, as Mark would usually say. The big day tomorrow, and you may have talked about this before, but it's the SPXpm, the new CBOE product, debuts tomorrow. Options Express obviously will be offering this product as we do most new products. I have to tell you that on SPX expiration, that Friday morning, especially if it's a volatile morning, if the futures are up or down, 10 points or more in the SPX. And then at about 11 o'clock, when the CBOE comes out with their settlement, is usually when I start getting manager calls throughout the rest of the day. People, listeners of this show, and people who regularly trade options are most likely aware of how the SPX settlement is calculated, the RUT and the NDX as well. And a big problem that people have seen, and this was pretty prevalent in 2008 when we had really volatile markets with huge swings and huge gaps overnight. You'd see settlements that were, obviously farther away from what the close was the previous day, but also outside the index's daily range. You would see a settlement
outside
that
the trading range,
outside the trading range, which by all reasons is just insane, because you say, how could the index not even trade up there? How are you going to put a settlement out? And We've talked about this slightly before, but those settlements are based off the opening prints of each stock that makes up that index, and not all of them open up. So you have late openings and stocks that don't even open, so they have to calculate it based on other factors. Now, that being said, I think the CBOE finally wised up and is offering the SPXpm, which is going to be a product that one will trade on Fridays, which is different because the previous ones stopped trading on Thursday, the Thursday prior to through the third Friday of that month. So these will trade on Friday. They will trade till 3:15 Central, 4:15 Eastern. They'll be based off the 3 o'clock Central closing price. So you'll have a much more reliable settlement, because one, you'll have up till the time that they cease trading to trade it. You won't have that overnight gap. You may not see the premiums that you're used to seeing in the standard SPX ones, because obviously there's no risk of an overnight settlement gap. One of the things we do want to mention specifically at Options Express is that you will be able to trade these SPXpm versus the standard SPX and get margin relief. However, the system will not recognize it at this time online. You will have to call the trade desk and have the broker manually adjust it. It's one of the things I wanted to point out, because a lot of people probably understand that they are hedged with this SPXpm if they're long dated, or if they're long the SPXpm versus a short SPX. They do want to call in, and we can get them margin relief on that. I think also the OCC recognizes SPY versus the SPX and SPXpm. We've never done that at Options Express, and won't do it for this product as well. But that being said, tomorrow is the debut of this product. We are looking forward to it, excited about it. I think it should, for retail clients, make it a lot easier to trade this product as opposed to the standard SPX. Another thing I want to mention, we had a lot of people keep asking about the Groupon IPO. It seems the more transparency or the more numbers that
you mean
they
that
release,
Ponzi scheme IPO they keep talking about?
I like Groupon. I think I was selling Pandora because I've been a long time listener, and they've just gotten worse and worse. I was selling what's the other one? LinkedIn. And Groupon is the only one I've been kind of like bullish on, and it's gotten trashed more and more in the news than anybody else.
They just had to restate their entire earnings for last year because they essentially borderline committed fraud by claiming the entire deal as their revenue when they share it 50-50 with their users. But aside from that,
I thought they had actually changed their name to Grouponzi.
Exactly. and be aware, John, you're talking to a serious bull here on LinkedIn with Auntie Mike here. He was a big fan. What was it, the 77 level? That was your level, Auntie Mike?
Yeah, that was and then we gave up on that was right around the 1-year anniversary show, or the 76th
the live show
anniversary show. We have since lost our bullish nature in that stuff.
So recent events have turned you to the dark side in LinkedIn, eh?
Just under the desk on LinkedIn.
But I'm hearing now, and this changes weekly, but they're saying the first week in November it looks to be an IPO. And I don't know. I obviously, you've seen some of these social media IPOs of recent times, and they seem to spike and then drift lower. But hoping good things for Groupon. I'm kind of a fan of it, but that may affect my trading, so maybe I'll just stay away. Another thing that I wanted to mention too, I'm doing a panel over at the CBOE on the 5th of October. Paul Stevens from the CBOE is going to be the moderator. I'm joined by Chris Rich from Jones Trading, John Grodnick from CTC, and Phil Kosmala from Lowry Asset Management. I believe Paul has put together something called the Analyst Day at the CBOE. So we'll be taking some Q&A and discussing options from a retail perspective, which is what I'll be covering, institutional perspective, and from an analyst perspective.
How dare he besmirch you by calling you an analyst, sir? I would demand a retraction of that title if I were you.
No, when he told me the title, I was like, ooh, because I'm like, hope he hasn't listened to the show, because we're not too big fans of analysts on this show. However, the analyst will be in the crowd. He is not referring to me as an analyst, but
okay.
So
I give them what for when you're there. I think your entire opening discussion should just be dragging the entire profession over the coals for 10 minutes. That'd be kind of fun.
Yeah, I think it'll go well, and I think when I got a small mob follow me out the door at the end, I may have some problems getting home that night.
Just say to them, do you think you really add any value to society? That should be your opening statement.
Why are you here? No, but I am looking forward to that. It should be a good discussion. Like I said, we have multiple speakers, multiple panelists, and I'm glad to be a part of it. That being said, I think maybe that you have a listener question you wanted me to answer, and I'll see if I can handle that.
Yeah, we got a few of them coming in here. Seems to be that now that people know we have you OX boys on the show, we're getting a lot of specific brokerage questions. We always got a ton of those anyway, but now we're getting some specific OX ones. And these are kind of fun. And one of them actually is a simple one, but one we received in various forms quite a bit over the years, so it's good to mention it on the air as well. This one comes from our forum, and it was posted by someone who goes by the handle Mr. F. And he writes, if a brokerage says the fee for option assignment is $20, is that per share, per contract, and you write some parentheses, on 100 shares or per order. So if I have 10 contracts of 100 shares each, do I pay $200 or $20, assuming they are all assigned? So this is a relatively basic one, but it's a nice, quick, easy one to answer. So Mr. Grigus, take it away, sir.
Absolutely. Yeah, and it's Mr. EFF, so we want to make sure we clarify that for the Mr.
True.
F out
That's
there.
True.
It's a good question because we do get this on the phones a lot. We get this question, and for new traders who are new to Options Express, it's a flat rate. So whether you have 1,000 options or you have one option, it's a flat rate that we charge. I think it's $9.95 actually. I'm not sure why he had $20 in there, but maybe he's at a competing brokerage firm. I think long term, it's something that you're going to see maybe disappear. I think the war of lower commissions has pretty much got to a level which it won't drop any further. So you may see other fees start to disappear, wire fees, and I think these assignment exercise fees will be the next somewhat valid complaint from the retail clients, and that we may have to take a look at and see if it's in our best interest to maybe either lower it or drop it completely.
I'd love to see a broker try to charge $2,000 for an assignment of a 10 lot. That would be
it would be cost prohibitive.
That's quite a business.
When we have a lot of short premium sellers and they go to close it out, we always charge 50 cents a contract when they're closing for 4 cents or less. At least try to give them a break so they can use that margin elsewhere. Yeah,
imagine the blowback. People get upset now because you guys don't charge you guys don't waive commissions for a nickel and below when you're closing. Like, imagine if you tried to charge $2,000 to close out that 10 lot for 2 cents or whatever, or if they got assigned on you for it. That would be might be some blowback on that. Well,
and I bet at one time they may have had that and had to rethink their structure very quickly.
I'd imagine so. But I want to thank you for that, Mr. Grigus. Informative as always. We'll have to bring you on again more often than once every 3 or 4 years or so. All right, and that's going to do it for the Express Block. And now we're going to roll right into Around the Block.
Around the Block.
Regardless of how active you are as a trader or an investor, a firm understanding of the inner workings of market volatility is crucial. You are invited to join pro options trader Mark Sebastian and pro futures trader Jeff Quinto for this one-of-a-kind live event on October 21st at the Chicago Mercantile Exchange headquarters. After Jeff discusses how volatility can play into the hand of a futures trader and Mark covers how to use volatility to trade options on futures, together they'll present unique combination strategies using futures and options in tandem. This interactive event will benefit every level of investor, from the novice futures investor to the most active futures and options day trader. Don't miss this rare chance to see two industry experts in one spot. Please go to pricegroup.com to reserve your tickets today. The cost of this all-day event is $895 before October 1st, with $500 off for Price Group customers and new accounts. Again, please go to pricegroup.com to reserve your tickets today.
And welcome to Around the Block. This was, of course, the portion of the show where we discuss what's happening down at the Walmart across the block from the new KYO headquarters, which is such a nice place. And I had a chance to tour it last week with Auntie Mike, showing me all of the fun secrets and secret passageways that go through that place. A fun HQ, Auntie Mike.
Yeah, no, it was great having you over here last week, and
I tend to liven up a room whenever I walk into it, sir.
That's right.
That's my MO.
That must be pre-burn incident.
Yes.
I don't recall you mummified at that point.
Yeah, my arm was not swathed in all sorts of gauze and bandages. I should be good for the live show next week, though, which is all important. All right, so coming up here Around the Block, a lot of things we've already hit upon. Of course, Greece is that endless question mark that's lurking on the horizon there. Some days it's the up yo-yo, some days it's the down yo-yo. The market can't seem to wrap its head around what the heck is going on out there. I know last week everyone was very ebullient that it was the end of the Greek fears, and now we're right back to where we started, it seems like. So who knows what the heck is going on in that front. But I think the same advice pertains there as it has for the past month or two, which is keep some units in the back pocket for a rainy day, just in case we see more of these bankruptcies, whack-a-moles, or these more Greek implosions course, we do have on the economic calendar, we have jobless claims coming up on Thursday, which can be a bit of a mover on occasion, and of course, good old non-farms on Friday. So two rather substantial economic events on the old calendar today, which we'll all be watching. And of course, Mr. Grigus mentioned it in the Xpress Block. It's worth bringing up again the much delayed, very controversial launch of good old SPXpm. Myself, as a former SPX pit trader, I never would have imagined the day when they finally would get an electronic contract listed and launched. I know they've talked about it for quite a long time, but I know the guys there on the floor are very protective of that contract and of the spreads that they can command in that contract, and they don't give those up very easily. So I can only imagine the type of fight the CBOE had internally on its hands to get this contract actually listed. But I'd imagine too some of the more forward-thinking of the firms in that product, especially the larger ones who like the electronic liquidity they get in some other products, see the writing on the wall, and they know that the benefits of this, especially to the retail, and bringing some of the volume back that has been leached away by SPY and some of the other products that are much more attractive to retail. This SPXpm has the best shot of bringing some of that back to the SPX pit, and of course, electronic execution always desirable for the retail set and for a lot more of the institutional set as well. I can't imagine, how these guys who work these 1x3 by 2.5 by 6 ratio 1x6s and ratio spreads in SPX on the phone right now. It's just got to be an ordeal. So I think this will be a little more fun for them from an execution perspective. And I'm with you, John. I think this is going to be an interesting one to watch, and certainly will drive some paper as well in the big product as people trading back and forth. I'm concerned here. I'm saddened that OX.
I was gonna ask, is this the end of the pit, or?
Oh, I don't know. I if it is, I wouldn't shed any tears myself. I spent enough time in that pit. I put it behind me now. So it's if it goes away, the dodo, which I don't think it will. It's a very, very powerful, very protected entity down there. But it's probably the beginning of the slow decline of that pit. When I first got out there in the late '90s, it was I was the last man to back. They've expanded it umpteen times since then. That spot that was in the far back is now in the middle, the front third of the pit. That's how big it is now. So that shows the demand to be in that product right now, compared to, let's say, random equity option on the floor. So that shows that there is some still demand to be out there, and there is a lot of liquidity out there and a lot of action to be had. But nonetheless, this is probably the inevitable slow spiral of shrinking spreads and all the other things that have befallen the equity options finally starting to eke their way into the institutional pit that is SPX. Of course, on the flip side, maybe it'll bring some more volume back to that product as well. So there is a ray of light at the end of that tunnel. And not surprisingly, on the eve of the launch of SPXpm, and on a day when the market is selling off fairly heavily, we have CBOE getting crushed down about 2% today, closed down about 42 cents to 24.05. You think on a day like today, volumes are up, the new SPX looming on the horizon. It would be a strong day for the CBOE, but the market not agreeing. It threw it out with the bathwater along with everything else. So not too many bulls thinking that maybe this is, we'll see what happens tomorrow if this is SPXpm lights a fire. We also have earnings coming up, I think, for CBOE relatively soon. So we'll see what those portend as well.
And I was actually reading something about the CBOE, the recent impact on its price. There's been talks about the CME group partnering with the S&P 500, and then there's been talks about the CME merging with the CBOE, which we know the CBOE's got, the proprietary clutches on the VIX contract and the SPX contract. So they were thinking that if those talks go any further, it could devalue the actual leverage the CBOE has, and going to say, well, we already own 25% of that name. I'd have to reread the article to exactly know what leverage they were talking about, but I think some of the pressure on the stock has to deal with that as well.
Yeah, that's a good point. Because I saw the article you're referring to. I only had a chance to skim it, but it is an interesting prospect. If they did pick up McGraw-Hill, they would have Dow Jones, and they would also have McGraw-Hill. They would have essentially they would be the owners then of the issuers of that exclusive license that they have for SPX. I'm not sure what if the pre-existing contracts that CBOE has at McGraw-Hill would supersede this deal or how that would work, but it would be interesting if they already owned essentially that contract, then I'd imagine their need to or their desire to pay a hefty premium to get the CBOE would be lessened. You're right, because they already would have a strong foot in that door. Yeah,
it said that the CBOE's contract or monopoly on the SPX and VIX expire in 2018, and they're going to want to renegotiate those terms before that. And if the CME owns 25% of the S&P 500, then it would give them less bartering, so to speak, abilities in those renegotiations.
Of course, if that deal does go through, then how long is it until the oft-cited, oft-anticipated acquisition of the CBOE finally goes through? I mean, that would seem to be a pretty strong precursor to a deal finally happening, wouldn't you think?
I would think that. And then just a thought on the PM options with the SPX. I think it'll be a good move long term. I think short term, you probably have some very upset locals, market makers in the SPX pit that are probably hurting to see it go. It's the pits are the days of yore that seem to be just coffee table chats now. And I was at the CBOE a couple weeks ago, and the VIX pit, it's an interesting pit. It seems to be a hybrid. There's a lot of stuff moving on the screen, but the big spreads and the big size are coming in, and you hear a little open outcry to the pit. So I would think the SPX, being as robust of a product that it is, this will help draw some market share back from the SPY, and you'll find an evolution to a hybrid that works between the screen for the smaller onesie-twosies and the liquidity that's still there for the big guys that want to move size to hedge big-time equity portfolios.
Yeah, it'll definitely be, I think, an interesting one to watch, and that's launching tomorrow. So listeners, shortly after this podcast airs, you'll be able to see for yourself what is going on in the land of SPXpm. But that is going to do it for this episode of the Option Block. I made it through the entire thing without going off the deep end due to these pain pills. So I think that was a Herculean effort on my part, if I do say so myself. I'm quite happy to have pulled that off. But thank you for joining me on this very loopy episode, gentlemen. And starting with you, Auntie Mike, what is coming up at Know Your Options Inc. you want to let our listeners know about?
I think we've been hinting that what is coming here, and it's the date specific. October 6th, this Wednesday, will be our 5th anniversary. We don't have a party scheduled yet, but we sure are happy that we've made it through our 5th year of being in business. So we're pretty excited about that.
And Mr. Grigus, what is coming up in the land of OX? You said you have your panel. That's kind of the big thing for you these days? The big upcoming one?
Yeah, so it's the only thing I'm thinking about until I get through it. This Wednesday over at the CBOE. I'm only up there for 45 minutes, so definitely not the highlight. They passed over my keynote address that I thought I was gonna give to the analysts. But no, I am looking forward to it. Right now we're short on live events. Right now everything Schwab is pretty much what I'm working on here, trying to get clients that want to move over from Schwab to Options Express done in the quickest and most efficient way. But in that SPXpm, I mean, we're gonna hopefully do a big marketing blast, push it out to those people that will hopefully be able to trade something where they're not left in the dark come Thursday afternoon, Friday morning.
Sounds good, and I would be remiss if I didn't also tell the listeners that they should surf on over to optionpit.com to find out what Mark has going on over there. Lots of fun stuff going on, a lot of changes going on at Option Pit, so listeners should go check it out, and we could talk about those on a future show. And speaking of future shows, we do have indeed the big live show coming up next week at the FIA Expo right here in Chicago at the Hilton on South Michigan Avenue. We'll be recording this show, the Option Block, at 4 p.m. next Tuesday, so a little over a week from now. Better figure out what the heck we're going to talk about, I guess. That'd probably be a good thing to do. But we'll be on the main stage there in the Expo Hall at FIA. So if you want to attend, but you're put off by that $50 registration fee for the exhibit hall passes, then by all means, surf on over to our website. You'll see and search for the free exhibit hall passes article. Should be up there. One of our other partners on the radio network, the Volatility Exchange, is providing free exhibit hall passes to anyone who wants to come see the show. So click on that link or surf on over to volx.us and you'll see the link around the top of the page here. You can find it there as well. So surf on over to our site or to the Volx website, and you can come see the shows as well as all the rest of the fun stuff going on in the exhibit hall there for free. And of course, we will be doing volatility views at 5 p.m. on Tuesday, and then the long and short of futures options at 1:30 p.m. on Wednesday. So a lot of good stuff coming up at the FIA show. But I want to thank all of our listeners out there for joining us today and for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.